Thursday, October 9th, 2025. I hope you're all having a wonderful time. Whatever you're doing, wherever you are, whatever time it is when you're watching this. And yeah, I hope you're doing good and doing well. Come to you live from the Middle East, right here in Israel, where we talk about things. And in this video, I'm going to talk with you guys about um, Bitcoin and crypto, and the fact that Bitcoin and crypto are likely to make a very significant move, and what is going to happen when that happens, and when is it likely to happen. And the answer is Bitcoin is going to make a very significant move when you least expect it. That is the long and short of it. For more details, hang around. I'll get to it. But the point is, Bitcoin and crypto are not going to just wait for you to get in the right position and make the right move. They are going to move according to the VEPs. As I have told people many times here on this channel of mine and wherever else I talk about this stuff, like in the Alpha Trading live streams, in our Discord, and elsewhere, where people ask me about trading. I trade the VEPs because that's what moves the markets. What is the VEPs? It's volatility, entropy, probabilities, and statistics. That is what moves the markets, right? And specifically, what moves the markets is buy pressure and sell pressure, right? If more people are buying than selling, or if there are more buy orders than sell orders, the price tends to go up. And if there are more sell orders than buy orders, the price tends to go down. Right? In fact, not even tends to, just does, because that is how real market dynamics work. It's not that complicated. So when is that likely going to happen with Bitcoin? Well, I can tell you, it's going to happen when people think it's not going to happen. Like in the moment, you're going to see that climb begin. Yeah, sure, you might have some people, obviously there'll always be some people saying, yeah, it's going to happen now, and they'll be right. But the vast majority of people will be wrong because they will try to time the market in a different way. They will wait and wait and wait for the price to come down to a certain area that fits some drawing that they put on their chart, some triangle or random line or moving average of price that has nothing to do with probabilities. It's just telling you what the average of the price is. And they tell you, oh, it's in a trend now because it's above a certain line. But that's not how trends work. I hate to tell you, if you're basing your trend information on whether or not an asset is above or below a certain moving average, you don't understand what trend is. Trend is measured with entropy. Trend is the other side of random walk. The assets are mostly moving random walks, about 80%, sometimes 90% of the time. Generally speaking, it's 180, sometimes 70, whatever. Most of the time in any asset on any time frame, the assets are in a random walk. And then about, roughly 1/5 of the time on any asset on any time frame, practically, they'll be in a trending move. And you can see that very clearly with entropy. And you can tell the direction of the trending move very clearly by the correlation, just like you can with volatility and its correlation. And, well, there's a lot of other information that we use to know whether or not the assets are moving up or down, but certainly just by trend and correlation, you can tell. And also, by the way, you can tell on random walks if you know what you're doing, how to read the information. You can tell whether it's on a random walk, heading up or heading down, or just going sideways. But yeah, that is when there is going to be an explosive move. By the way, explosive moves have happened many times in Bitcoin and crypto in the last 16 years since Bitcoin first came onto the markets. So it's not as if these things are super rare events. Yes, they happen not all the time, like massive explosive moves, but they happen enough that you really shouldn't ignore the fact that they do happen. Which is why, if you're like a long-term investor, the old adage holds. It's not about timing the markets; it's about time in the markets, and that's true. If you're a long-term investor, you hold and you'll be fine, right? If you hold for a long, long time, you'll probably be fine. In fact, you'll probably be much better than fine, as long as you keep building your stack and just buy and hold, buy and hold, buy and hold. Because DCA, right? Regardless of what the price is, just keep buying the same amount over and over again in whatever assets you're buying, and over time, if they're good assets, they'll do fine. And when you see that there's no more potential value or that the risk is too great and you think it's going to go the other way, you cash out in those assets that you think are worth cashing out. But you buy and hold the ones that you think are going to continue increasing in value over time. That's the whole trick. That's Warren Buffett 101. Be greedy when others are fearful, and fearful when others are greedy. Buy and hold. Don't hold cash as much as you can. I mean, hold cash when you need to. And sometimes you have to wait to find something good to invest in. But generally speaking, if you have enough cash, set aside to take care of your basics, and you have money to invest, you should be investing as much as you can. That's the investor's rule. Right? That's how you make significant gains over the years and decades, as he has demonstrated very neatly with his career as an investor over many decades, and his partner, the late Charlie Munger, as well, also demonstrated that they could make great investment decisions and have fantastic, astronomical, just out of this world gains compared to other people over time. But you know, that doesn't mean that they understood everything. But they understood enough to do really, really exceptionally well with the things they invested in, and they understood the things they invested in. That was their whole trick. They always chose value investments, if you will. It was always their thing. Buy things that have value, buy things that deliver value to people, products or services that people consider valuable. You know, things that have dividends for investors also good, but buy things that have value and that are going to likely increase in value over time. That was always their thing, but that doesn't mean that they understood everything. Like I said, for example, you know, Warren Buffett, maybe he understands more than he lets on, but he does not generally seem to really get the concept of crypto and Bitcoin, although he invests in companies that invest in crypto. So when he says he doesn't think it has any value, well, he's invested in companies that he thinks have value, and they've invested heavily in crypto. It's just that his fortune was built in the fiat debt-based system, so he does not appreciate the crypto system, which is not that. Crypto system is all about limited supply and increased value over time through scarcity, as well as utility. And you can argue back and forth and debate back and forth whether or not crypto is useful, right? If it has any utility or not. But I believe it's demonstrated very well that it does have utility, at least as much as fiat, and in fact a lot more. Right? But even if all it did was what fiat does, then you can't really make the argument that it has no utility if you are somebody who built your wealth in fiat, because fiat currency is just, you trust that that paper is worth something. It's your perception of its value, and the amount that it goes up and down in value is greatly affected by however much the government tells its Federal Reserve Bank to print, or however much the Federal Reserve Bank decides to print, right? Or central banks or whatever, depending on what country or jurisdiction you live in, where they print your money. Um, so that's why uh, the people that are entrenched in the fiat system and don't like crypto are being a little bit um, understandably defensive in why they sound like curmudgeons, right? They don't want this thing to come and possibly disrupt. It's very sad, but they don't want to have this new technology possibly disrupt their wealth, especially if they're in their later years already. Now, look, it's not like Warren Buffett needs Bitcoin. Frankly, he's so wealthy, you know. And how long does a man in his 90s or whatever? What's his time horizon? You know, if he's extremely fortunate, may live to 120 plus tax, plus VAT, whatever. But he certainly has more than enough to live out the rest of his days, and you know, those that come after him and inherit his wealth will do just fine as well. Whoever those heirs all will be. Um, but the point of that is that it shouldn't be surprising that people who built their fortune in fiat are protective of their old way of doing things when they are confronted by this new technology that they frankly don't necessarily fully understand. There are a lot of things about crypto that even much younger people do not understand. People who are fully immersed in the tech every day, but they don't understand what crypto is all about, really. And so they make decisions about crypto that are sometimes very wrong-headed, very ignorant of what crypto actually is, how it works, what it does, what it allows to happen, what it enables. So that's why I'm not particularly, I mean, I'm not only not bothered by it, why would it bother me what somebody else thinks about it, but I'm not pessimistic in any way about crypto when people say, well, Warren Buffett thinks it's a scam or whatever, it doesn't have any value. Listen, he's a really smart guy and all, and there are many really smart, much older investors, but that doesn't necessarily mean that they comprehend or appreciate or like the idea of something like crypto happening and replacing fiat as the main method of moving money around the world, moving values around the world. Like, there are a lot of people who are going to resent that, especially people who are already rich or wealthy and don't have any crypto yet, and they feel like they're getting in the game maybe late now. But of course, most people who are rich or wealthy, if they've been paying attention at all in the last 10 years, at least, they would have, they would have heard about it at some point from somebody, right? Unless they're like somehow rich or wealthy and completely living an analog life, have no connection to the day that they're actually living in, and nobody's ever told them anything, and they're living like hermits, and they're just, they have their money in their portfolios, and they just, live a quiet hermit life, which, by the way, is a thing. There are definitely some people like that. You'd be surprised. Not everybody who's rich or wealthy is automatically just connected to, Skynet and has instant access to, all the things rich people have access to. No, it's not like that. You still need to network if you want to know people. And not everybody who's rich built their own wealth necessarily, right? They might just be managing what they inherited, and they're not necessarily connected to other people, like as networking people. They may never have been good at networking. They may never have done networking, They may never have had any interest in getting to know other people, even if they were introduced at some points to other different people. And maybe only later in life they realize, oh, those connections were important. So there's a lot of people who have good financial fortunes, but don't really know what to do with it. Hello there. Why you do live video? Why not? I like to do live videos. I like to do walk and talks. This is a walk and talk. Welcome to my walk and talk. This is kind of a walkie-talkie video. You want to call it that? Yeah, I don't. I think fiat. Fiat wealth is all good and well, obviously, for those who have it, whether you earned it or just came into it by fortune. But the bottom line is that crypto is going to continue to build itself, or is going to continue to be built by innovation and adoption and derivations and regulations and legislations that are literally shaping the future of finance. And it's not going to be, I've often said it's not going to be from today to tomorrow, but when it happens, you will notice it in an overnight sense, meaning it's a slow creep, if you want to call it that, slow mission creep to increase its presence in everyone's lives, slowly but surely, one company at a time, one organization at a time, one big whale at a time, one government at a time. Eventually, it gets to the point where it's everywhere without you even having noticed that it's everywhere now. And then the next thing you know, your bank makes an announcement that they're switching to stable coins as the default currency for transactions between banks or any other thing like that, right? And then it won't be just your bank. Then it'll be, maybe you're in a small bank, it'll be your bank because you're like in a place where they do that thing. And then it'll eventually be one national bank and one very large bank that's national or international, globally significant in some way. And then it just won't be one, it'll be 2, 3, 4, 5, and then very rapidly, all of them will be doing that. Right? And it could be even that multiple such organizations do that at the same time, which would mean that the entire process, even though it will take years and years to get done, when the switch happens, the switch will be very quick. Right? You'll notice that'll be overnight when the whole world finally flips to Satoshis instead of dollars, for example. It'll effectively be overnight, even if it isn't actually a 12-hour period, or 20-hour period, but it'll be something that happens on a practical level for a huge amount of people in a kind of overnight experience when some agreed upon date happens to occur, when some event that was agreed upon happens, and then all of a sudden everybody's using Satoshis and lights or lamps or whatever other micro units there are of these cryptocurrencies that people are buying and holding these days and selling, obviously. Anyway, that is the long and short of the message that I have for you today about Bitcoin. If you want to learn about trading it, short-term time frame trades using volatility, entropy, probabilities, and statistics, the way to do that is to join us in our live streams at Alpha Trading. Come and join us. They start every day at 9 a.m. U.S. Eastern Time, Monday through Friday. You can go to our, it's just at alphatradinghq.com/Discord. Enter the Discord, it's free. Join the live chat, it's free. And come and learn how to trade low time frame volatility, entropy, probabilities, and statistics. And you can learn all that stuff for free. There are some tools for pros who want to up their level of trading. But if you just want to learn the basics with very powerful tools that all of the founders of the group actually used while we were building alpha trading, you do that. Those tools are for free. So is the information about it. Anyway, that's all for now. Like, subscribe, comment, share, so that what I talk about can reach more people. Okay, take care. Peace.